Hey guys, welcome. It's Derek from OptionBoost.com. I wanted to let you in on a trade that I've been working on. It's a trade in Facebook. Basically, Facebook has broken out a little bit above this range. They look like they might be testing the 70 level. I'm not necessarily bullish on Facebook, but I think the valuation is way stretched. But that's why I'm structuring this type of a trade to where I'm lowering my basis on a bullish trade, meaning that I'm going to go short a call to help me pay for a bull call spread. So let's check out the trade. The trade I'm looking at, if I go out to the March option chain and I click and select to buy a vertical, the vertical that I'm looking to buy is the March 65 by 67.50 bull call spread. And I'm going to do 20 of those, okay? Your position size might be different, but this is the position size that I am going to take on this trade. It is after the market close right now, but, the open tomorrow, not too much is going to change. I mean, you could pretty much structure this trade very similar to what I'm doing now. So just keep that in mind when if you haven't put on the trade and you're going to put on the trade tomorrow. The prices might fluctuate a little bit, but you don't necessarily have to do this particular vertical, but you want to get it for around the same price ratio from where I sold the call on top of this bull call spread. So let me show you the call that I'm going to sell. I'm going to go back and I'm going to sell the March weeklies. These have 15 days till expiration. And I want to sell the 73 call, and I want to sell 20 of those for $1.10. Okay. Now that brings my ratio down on this trade. I bought the bull call spread for 160, and I'm selling the calls for $1.10, 20 on each. So that brings my basis to the trade for 50 cents. So I'm collecting $1.10, and I'm buying a vertical for $1.60, so it's 50 cents for a $2.50 wide spread. Okay, so I'm gonna put this on and watch it, and I will update you guys tomorrow and the next day, and maybe even into next week, and to see how the trade progresses and how I adjust it if it goes against me, how I'm gonna roll out and adjust the call spread, maybe write some puts against the position. But I want to give you guys a basis on how I structure trades and how I move them around fluidly when they either go against me or go in my favor. Okay, so I will see you guys tomorrow. Hey guys, Derek again. It is Thursday. It has been exactly 1 week since I did the last introduction to the trade I was looking at on Facebook, just as a follow-up to this trade. I've done some adjustments, and I want to go over these with you. Basically, the first adjustment I did was, remember we sold the 73 call, the weekly, to help pay for the spread, and that call actually came down in value quite a bit. So it was the first March weekly, which was right here. It is now around 40 cents. I actually bought it back for 50 cents earlier in the day. The market's closed right now. So that brought in $1,200. Now, if you guys remember, we bought the spread, the 65 by 67.50 bull call spread. We bought that for $1.60. So that already put, 60 cent. It gave us a 60 cent credit when we bought those weekly calls back, which applied to the cost of the spread that we bought. So right now, we only have $1 that we paid for the spread if we add this credit. Now, what I did with this adjustment after I bought this call back was I swung the other way, and I went and I sold the 66 strike weekly put for $1. So if you look at the chart, basically the chart has come down a little bit, and I'm seeing support like around the 65 level. So I went ahead and I swung the call. I sold the 73 call, remember, and then I covered it. As the stock was falling, I covered it for a nice profit. Now the stock is heading towards support, so I'm looking at the 65 level and thinking, okay, well, if Facebook comes down there, I'd probably, want to buy some shares. So I went ahead and I sold a weekly put down there to help pay for the cost of the bull call spread that we have. So at the 66 strike, if I sell the 66 strike for $1, I'm protected down to the 65 level, which is what I'm looking at as intermediate support right now. So if we look at it now, since I sold more premium, I got a 60-cent credit on the call that I sold, and then I swung out of that and went in the other direction, and I sold the weekly put, the March, the one with 15 days to expiration, for $1. So if the spread cost $1.60, I took in a 60-cent credit, and now I just sold the 66 strike puts for $1. Basically, I'm looking at a free trade. I mean, the cost is covered as long as Facebook closes above 65 by March expiration, which is in 22 days. Now, if it heads lower, I won't have any problem with closing out the spread and rolling this put down to something, basically lower. If this put goes to say $2 and goes against me, then I'll look for something, later out in March, the next expiration cycle for $2, and I'll just keep selling my losses out that way. This is something that I cover in the course. It's very, very important. So what we have here is if Facebook closes above 66 by March expiration, we have a free trade. Now, what I'm really looking for is if Facebook closes above 67.50 level, which is our bull call spread that we had, we're looking at $1,800 on the spread. The put sale is going to bring in another $2,000, and I've already locked in a $1,200 credit, or $1,200 in cash, by buying back this short call. So if we close above 67.50 in like 20 days, we're looking at a profit of $4,800. So I will touch base with you guys maybe in a few days and see how this progresses. Okay, thanks. Hey guys, it's Derek. This is the last update on the Facebook trade. We got a nice pop in Facebook today, about a 4% move up. So rather than wait around for the last 30 cents on this bull call spread, I decided to take profits today. As you know, we bought the March 65 by 67.50 bull call spread. We bought it for $1.60. Today I sold it for $2.23. That brought in a profit of $1,260. We also, as you know, we sold the 73 weekly call. We sold that for $1.10, and I bought it back for 50 cents. That brought in another $1,200. And the last part of this trade, we sold the second week of March, the 66 weekly put. We sold that for $1, and today I bought it back for 22 cents. So that brought in $1,560. The total profit on this is a little over $4,000 for 10 trading days. So in 10 days, $4,000, not too bad in my opinion. If you guys want to learn how I trade, I have a 12-hour video course at optionboost.com. Please check it out, and I wish you a great rest of the week. Thanks. Bye-bye.